Welcome to the show, everybody. As always, it's Capital Interactive with Besim and the Boz. We have a very important episode today, and we have the master of all things Treasury in Besim. So we're going to be picking his brain and going into the finer points of what is Treasury. Besim, and his background, has spent many years in a Treasury capacity, so he'll have a lot of good information to bring to the table. I appreciate him kind of letting me interview him and give you guys all a bit of information. So that being said, I really want to dive into this episode and basically, what is Treasury? What does it mean? So all that being said, Besim, I want you to take the floor. When a bank or bankers and whatnot talk about Treasury, tell us a little bit about what Treasury means. Give us an overview, a definition, and what is Treasury in your mind?
Yeah, no, thanks, Adam. It's good to see you, man. I think people have different definitions of what Treasury are. And so what we're talking about today is exactly what you said, kind of what Treasury means in the context of a banking relationship.
Mm-hmm. Yeah.
Okay. Because if you're looking at Treasury, like in a corporate banking background, it's slightly different. But where this is more in the context of like if a banker's coming to you talking about Treasury management, or you're talking to your team about the Treasury services at a bank, what does that mean exactly? Mm-hmm. And, it's interesting because this particular part of the bank is something that the lower end of the bank revenue size is not even aware of. Mm-hmm. So a lot of times, for example, if you go into a branch of a bank and you are in the small business portion of a bank and you ask for certain services, they might not even be aware that these things exist. Mm-hmm. And so, but if you're on the corporate side, you're going to hear a lot more about this. And the commercial banks, they do know all about it. And you'll be amazed at what services banks can actually provide you. So
what you're saying is also, it's more than just a place to park your money. Because I think that's what most people think about when they think about Treasury. We'll get into this in a bit, but like my deposits, I'll just deposit at the bank and that's Treasury. Well, Treasury is so much more in terms of just a suite of products and solutions, but also in many ways how it can help a business. Right?
Yeah. So, we look at Treasury as cash management, really. Mm-hmm. Okay. And I see really 4, maybe 5 different ways where a bank can really help with this. And so we'll break it down here. And basically, what those are accelerating receivables. So that means making money come to you faster. Mm-hmm. How can the bank help you get money from your customers and other people like that faster? That's one first. Then controlling the money that's going out.
Your payables.
Yeah, that's the second thing. So your payables. Mm-hmm. So that doesn't necessarily mean that you're going to delay it, but in some cases it is to delay it. But it's more about having control over that, so you can kind of better forecast your cash position and things like that. So that's the second thing. The third thing is all the information that's coming in to you through the bank, information regarding the debits and credits into your account, all types of information regarding who's sending you stuff. Things like that. How do you manage that information in a efficient manner? That's the third point. And the fourth major point that I would say is preventing fraud from your account. Mm-hmm. Okay. Mm-hmm. So securing your accounts, putting services and structures around your accounts that are going to help provide security and make it difficult for fraudsters kind of to reach you at vulnerability. So there's the 4 major points that I would say that banks can help you with. And you should really need to talk to the individual on your banking team that's called a Treasury Management Officer. Mm-hmm.
Right. Well, to that earlier point, and that's a very good segue. Before we start to get into some of those particulars, receivable, payable, the platform that it is, and so on and so forth. So, what you're kind of intimating is that your needs and your volume also dictates what services and what level of the bank you need to be in, right? And I think that goes to an earlier podcast where we're talking about really, interviewing the bank in terms of what they can provide and then what you need as well, right? Because not all Treasury services, not all bank sectors fit a particular business, right?
Yeah, Adam. So you're right. So depending on the industry that you're in, there are certain norms, certain products, certain things that are specific to that particular industry or that particular industry may need, mm-hmm. that are a little bit different. So just to give a quick for example, so like if let's say you're a large energy retailer or like a cell phone provider, and you've got clients all over the country and you're collecting payments from all over the country, well, you might want some kind of a lockbox solution where people are sending you payments to centralized lockboxes,
Right.
and then the bank might be managing all those documents, all the deposits for you. Maybe you're a retail center where you're getting a lot of cash. How do you manage all the cash? What do you do, so that you can protect your employees, reduce risk, reduce theft, things like that. What do you do? Those are treasury services that are different because if you're like the previous example, the cell phone provider, they're not going to accept cash. They're going to accept checks, credit card payments, things like that. So they're different. Industries have different norms, different things that they need. And so the treasury officer is familiar with kind of the norms of those businesses and the challenges that they have, and they can kind of help you through all of that.
Yeah, no, that's a good point. And would you say, but again, before we get into the specifics, like, what are some of the trends you've seen in Treasury over the last, because you've been involved in this 10, 15 years, and I mean specifically as it pertains to like digital versus paper, the old school paper checks, which is not in vogue nowadays for a number of reasons, fraud being one of them, but more of a digital push with Treasury.
Yeah, I mean, in general, the banks are trying to go more digital. It's just more cost effective, and everybody else is too. And so there's been a huge change over the last 10 years, 12 years of, the way that we transact in a bank. I mean, if I didn't work at a bank, I probably would never go into a banking center. You know what I'm saying? And
I don't know the last time I went in.
Same with the check. I think I write maybe one check a month.
Yeah.
And it's because that particular place wants to charge me like a huge fee to do it electronically.
Right.
But in general, it's like maybe one check a month,
Yeah.
And so those type of things are happening in business. It's actually funny because you would think in business things would move a little bit more quickly, but actually I see more a proliferation of checks and paper-based stuff in business than I do on the personal side. Maybe that's just me personally, or depends on the generation.
I'm very much like that.
Yeah.
Like when I do my bill pay personally,
Yeah.
I don't know if I write a check. I'm just trying to go through. I mean, have I written a check in the last year? A few of them, like 4 or 5, but everything's bill pay. So it's funny that the personal side of finances and treasury is to your point, like more advanced than some businesses. Because I talk to business owners all the time where they're like, yeah, we write 100 checks a month or 1,000 checks a month.
And what's funny is there's actually good reasons for that. And one of the main reasons for that is because of the dollar amounts. So if there's a problem with a $55 check that you sent to somebody else, it's an electronic payment, it's not going to kill the bank like if it's a $55,000 payment that one company sent into the next. So and then there's the liabilities are different for both individuals and businesses. And so because of some of those laws and some of those things, it takes longer for banks to feel comfortable rolling out some technology that they use on the consumer side to the business side. And it's really interesting because that's one thing that's been frustrating for me in the past as well, is like we'll see like technologies roll out in the consumer space, and then they won't be in the commercial space for a while. But there are some more sophisticated things on the commercial side that you would never even think about on the business side. So back to the trends, another huge trend. I think there's going to be a huge transformation in payments over the next 10 years.
How so?
Man, there's so much stuff going on. So now you're like, so for example, you already kind of see this on the personal side, but you've seen over the last 5 or 7 years where basically now you can send people payments to their phone or to their email or whatever. So it's basically an alias. So there's been a big push to like not giving out your account information, you're giving out your phone number or your email address or whatever like that. And that's like an alias way for people to send you money. So I think there's going to be a big transformation as far as that's concerned. And then I think there's going to be a huge transformation when it comes to the blockchain. So, for those of you that are familiar with the blockchain, it's just going to be so much more efficient to make payments. And actually, if you look at who holds the largest amount of patents in blockchain, most of them are actually financial institutions.
Right.
Because this has a huge way to disrupt the way that they do business, and it can make them in the short run very, very profitable if they're able to roll those out and be the only one, for example, that uses this blockchain technology to settle their payments.
Yeah.
Because you can, I mean, if you think about it, it could cost you $50 to send a wire right now across the world.
Right.
Okay. I mean, now granted, to the bank it doesn't cost them that much, but they do have to have they do have to be connected with the Fed and how on the SWIFT network and all that type of stuff. If they're doing stuff through blockchain, it's going to be a fraction of the cost. I mean, theoretically, it could be cents to send this wire now across the world, and so, I mean, how much of that gets passed on to the consumer? How much of that, turns into profit for the bank? Things like that. That's going to be very interesting what happens over the next, 5 to 7 years, I think.
No, Besim, those are great points. I appreciate that. Thanks for bringing some of the foundation of Treasury. But let's start to get into some of the pillars, some of the tenets of Treasury, and really where a bank can add tremendous value to a business. Let's start with the first one you mentioned when you opened up the show, and let's talk about receivables and basically a bank's ability to help expedite the collection of money, which every business to a degree is going to want to do, right? Collecting money faster is better, is it not?
Yeah, definitely.
What are some of the
I mean, the whole idea about this is let's try to shorten the working capital cycle so that you have less cash tied up in your working capital cycle and you can actually use it in your business. And so there's a lot of tools that banks can help you with, depending on what you want to talk about. And I'll talk about just a few of them so you guys can get an idea. But what you really should do is sit down with your banker and with your treasury officer and talk through specifically how you actually run through your process, right? How are you billing? Who's sending the bill? How's this happening? Like what do they get? How long do your customers have to pay? Once the payment comes in, how are you applying the payment? All those details, many of them can be automated. And so if you're willing to get in the nitty gritty with your treasury officer about that, they can find ways to eliminate steps in the process or eliminate mistakes and things like that. So basically, so for example, let's take the example that we took about earlier, because this is a lockbox, for example. So a lockbox is basically the bank accepting payments on your behalf to a dedicated, basically, postal box that the bank has. So if you've got customers that are all over the country or are concentrated in a large area and they're sending you paper checks, for example, what the banks can do, and different banks have different capabilities when it comes to this, but the more sophisticated banks can do amazing things with the lockbox. But what you will do is you'll send out your bills with the bank's P.O. box on it. I mean, it'll have your name on it, so it'll say ABC Company at P.O. Box, whatever. And when banks receive those payments, they'll actually go to the payments actually come directly to the bank. The bank's going to be getting, most times, they're going to be getting mail every hour. So where you might only get it once a day, they're going to be getting it every hour, okay? Or sometimes a half an hour, or maybe 12 times a day, depending on the bank. And so they're going to get a more frequent mail run because they're getting thousands and thousands of pieces of mail all the time. So the mail's going to come to them a little bit quicker. So if someone sends you a check, it's going to go to that mailbox. It's going to come quicker. The bank's going to open the check for you, apply that deposit directly to you. So what they'll do is they'll take the deposit, apply it directly to you. If you want, they can scan the image of the remittance data. They can make a whole file. Like, depending on how much you want to pay, they can sit there and key all the information where you just upload it into your system. It completely goes into your accounting system or ERP system and basically just feeds you data. Now, that's going to cost money because the bank's automating it. Some of the stuff they can do through image capture, where they have AI actually capturing all the data. Some stuff they actually have these huge data rooms where people are at a computer and they're just like typing in information that they're taking off of, like, the payment. Maybe it's, this check came in, give me the check, the person that sent the check, their address, the MICR line information, check number, maybe I need to know what the invoice number is, all that stuff. And they're putting it all into an electronic file. Now, if you have the capability, they can send you that file and you might be able to just upload it into your system, and all of a sudden all that reconciliation is done. And then the only thing that you're really messing with then are the exceptions. So let's say, like, somebody sends you, like, they don't send their invoice in and it just has a check and it has like some handwritten note or something with it. Well, they'll send that to you in your office, or they'll make the deposit and image it and then send it to you electronically. And then all you're dealing with are the things that are exceptions. And so you might go from having 1,000 deposits a day to worry about, to literally having like 10 deposits a day that you got to figure out what they are. And those are just the weird ones. And so that's just an example of how a bank can actually completely outsource this system to you. Well, another thing with the lockbox. Let's say you're, for example, in Texas, but your customers are concentrated in, New York, California, wherever. Well, a lot of times the bank can also have their lockbox located in those localities.
Yeah.
So let's say like you had 30%, 40% of your business was up in the Northeast, and you're like on the West Coast. Well, you might put your lockbox there, and then that might take a day off of the float. So that day that the mail system takes to take it from New York to California or whatever it is like that, it's just going to go into New York straight to a deposit,
Right.
and you get that cash faster. So this is helping you bring money in quicker.
Right.
You see what I'm saying?
Because I think both you and I have, and I know I've talked to clients where when we're having a discovery conversation exactly as pertains to receivables, and rather than, processing checks every hour on the hour like you can with a lockbox, they go once a week or once every other week, and they just have stacks and stacks of checks pile up, and then they make a run to the bank. And it's like, well, you're sitting on how much money for how long?
Yeah, exactly.
Why not get it instantaneously?
Yeah.
If you're getting a bill paid in full by a client, have that come to you as soon as you possibly can. So it's a great solution.
Yeah, exactly. So that's just an example. I mean, you can have other situations where instead of getting checks, you're debiting people directly via ACH, so you're controlling when you're debiting them, when the money's coming out, all those type of things. The banks can help you out with those systems. I mean, there's just so many different ways that the bank can help you make sure that you get the money in quicker.
Right.
And, accepting credit card payments, There's a lot going on with merchant services and with credit card payments. There's so much data that's involved.
Right.
Getting those payments in and then actually mining the data, you can do amazing things. I had a customer that completely transformed their business. Well, I don't want to say completely, but it made a major impact on their business. Some of the data that they were able to capture from the merchant card services, they were able to start adding additional lines of products to their stuff because they kind of looked at the credit card data and saw where customers were going right after they bought stuff from them. They saw that they were going to this other particular type of store, and they said, "Oh, well, let's just start stocking stuff that they're going to buy over there, and then they don't have to make that additional trip."
Yeah, that's awesome.
And so they were able to increase their revenue, and that's just from the data, that they were getting from that. But so that's just an example of how you can accelerate some payments.
Okay, so that's talking about getting money in faster, which is great.
Yeah.
Now let's talk about more control over the information and maybe some of the outgoing money, and let's flip it on the other side of the house. Let's talk about payables here.
Yeah, so payables, I mean, you think about payables, and usually you're going to want to delay payables a little bit because you want to try to keep cash in as long as possible. But the real thing that you want to do with the payables, it's really about knowing what your cash position is and what cash you have available to do things with, And so if you, for example, send a check to somebody and they did exactly what you said before, they sit on the check, and they go deposit it once a week or once every 10 days.
Yeah, how do you forecast that?
How do you forecast that? How do you know? How do you know if you can use that money? How do you know you got 10 days now? How can I use that money? Or not?
Right.
Or how do you know the check is not even lost? Maybe the check was lost in the mail, and you're sitting there, and you got an additional $10,000 that you could be using right now, but you don't know about it because that check's lost. So there's ways. The main thing is about control. And this is where some customers, they don't seem to really understand. It's not necessarily about delaying the payment all the time.
Extending.
It's more about controlling it. There's tools to extend the payments to, like credit cards. You can use that to give you maybe another 30 days. But using payments like wires, ACH, different types of things like that, where you can actually know that this is going to settle on this day.
Yeah.
And I have this much cash to use at this time. And instead of sending a check a week in advance so that it gets there on time, I can forecast that, hey, if I send the ACH 2 days before, I know it's going to be there on time, and I know that money is coming out on this time, and I can use that money up until this day. That's really what it's about.
Right.
So there's a lot of electronic tools, electronic payment tools that are really becoming more and more prevalent, that help people understand what their cash position is from a day to day.
Yeah.
And that's what the control is about whenever you're actually making payments.
There are more tools to help you get a finer tune on your working capital cycle, right? And really understanding all the time money's coming in, all the time money's going out, and then, starting that cycle all over again. It's not, like you said, it's perfect. It's not necessarily about extending payables, but being able to have a firm grasp on when things are going to settle and what amounts so that you can start the cycle all over again.
Yeah, exactly.
Well, that's very smart. So that covers receivables, that covers payables. Let's talk about another major tenet, and this is something that's really just blown up over the last several years, and it's such a big issue, and that's fraud, right? And there's multiple different kinds of fraud, and to the point earlier, digital versus paper. Many banks are pushing to really focus more on digital than paper because once something is put in the mail, and Mr. McFeely takes the post, and so on and so forth. It's subject to anyone getting it, manipulating the numbers, and so on and so forth. So fraud is it has many different ugly heads and faces. Yep. Why don't you talk about fraud and how Treasury can really help mitigate and fight against some of that?
Yeah, definitely. So I actually did a whole podcast on kind of protecting your account from fraud, and so we'll link that here. But basically, the bank has a lot of tools that you can use to help prevent fraud on your accounts. One of the most important things I would say, and just so to get straight to the point, is not a bank thing, but if one of the most things I would say is just have good communication with your customers and with your clients, because if you see bank account information changing or something like that, you need to pick up the phone and actually talk to them on the phone, Yeah. So I'd say that's a huge thing. But back to the Treasury part, there's a lot of different things that banks can do to help you with fraud. So they can help you on paper-based fraud by services like Positive Pay, where basically you're partnering with their bank to export ledger files and sending them to the bank before you actually make payments, and then the bank will be checking against the file that you sent. So that's one major way to check against paper-based fraud. So basically what you want to do is get less of your checks out and available in the ether. Every time you send a check out, that check is going to have all your account information at the bottom of the check, then the maker line data. People can then create new checks. Like if you think about it, you're going to a third party to make your checks most of the time anyways. So if someone has all that information, they could just create checks on their own and go out and spend with them. And if you have no protections on your account, it's going to be a problem. Yeah. You can even buy these days maker line printers, maker printers. Really? And you can print the checks literally from your office. Sure. And so if somebody has all your account information, that's not a problem at all. They can do it super easily. And then, people think that banks have some kind of liability for that. Well, it's not the same thing on the personal side as it is on the business side. On the business side, the bank's liability is just to provide you with tools to help have reasonable tools to help prevent fraud. If they've provided you all these tools, they're not gonna, and educated you on and showed you them, they're actually not really liable to refund your money if you have fraud. Yeah. They didn't create the fraud. This is a third party that created fraud. Why should they be liable for it? On the consumer side, it's a little bit different, but on the business side, there's an expectation that you have a certain amount of sophistication, that you're checking the accounts on a frequent basis, and there's more liability. So it's important that you protect your accounts. So from paper-based fraud, you want to get less paper out there. Use tools like Positive Pay to partner with the bank. You're giving them your check information as you rent it, and they can see if it's on there.
It's a good check and balance.
Yeah, definitely. But that's one way. Another, from electronic fraud, the same thing. They can pull your account information and just debit your account. What's stopping someone from doing that? Right. Really nothing. If you don't have ACH blocks and filters, you don't have ACH Positive Pay, there's nothing stopping someone to do that. So you can actually put filters on, and you can put blocks on the account to help prevent that. Every company that debits your account has what's called an ACH company ID, and based on that, you can say how much, who's debiting your account, who can debit your account, and then also there's a lot of times tools you can use to even say how much or how often or things like that. Every bank has slight variations, but the basics of these fraud prevention tools are the same. And then one of the last, it's not really the last, but one of the major areas I would say is your account structure is another thing that has a big impact. Is like how is your account structured to protect funds? So you can have multiple layers of accounts where there's automatic sweeps going in. You can have some accounts that are for deposit only, that when you're giving out like employees account information so they can go make deposits, they can't go take that.
It only goes in, doesn't come out.
Exactly. Things like that. So there's a lot of things you can do from an account structure. And so it just depends on, how much money is at risk, what's the probability of having something happen? How many people are touching the account? Things like that you have to talk through with your banker and your treasury officer, and they can put, tools in place to help prevent some of those things.
One of the things we see in industry banking specifically, though, is, a lot of times I don't think fraud is taken seriously enough. And it seems to be with a lot of clients more reactionary than proactive. Why is that such a prevalent issue?
That's actually exactly what I tell my clients is like, people don't realize what the risks are out there, and I tell them, don't be reactionary, because when you react, it's going to be too late. Mm-hmm. We have literally seen hundreds of thousands and millions of dollars in fraud happen, wire fraud, different things like that. And people that don't have their accounts protected, they lose money.
Right.
I've been at banks where there's been litigation between the client and the bank because the client thinks the bank has some kind of liability. And the bank's like, well, not really. I mean, we put all these things in place. I've seen the banks, like, they do stuff. I've seen like major wire fraud get stopped by banks because it's going to a suspicious account, and then we have to go in and verify with everything with the client, and they have to sign off on it or whatnot. So you might lose hundreds of thousands or millions of dollars if you're not proactive. Mm-hmm. Where in the short run, most of these services are pretty reasonably priced. Some of them are like basically free with your deposits. It depends on the bank. Yeah. So I mean, you could have a semi-secure account, pretty secure account for a very reasonable price, and that's really not a place you want to skimp.
Yeah, I mean, that's not where you should be fighting over dollars and cents.
I mean, you're gonna wish you had, like, if fraud event occurs, you're gonna wish you paid it.
Yeah, absolutely.
It's just the headache. Let's say you get all your money back. It's just the headache that you have to go chasing around and going all this stuff and spending all your time, and it's a distraction from your business. You're gonna wish that you just bit the bullet and paid the couple $100 a month, or $50
and make
a month,
no mistake about it,
whatever it is.
Fraud is very common. We're not talking about one client out of 100 or something like that. I would say out of 10 clients, what number experience some degree of fraud over the course of business? And it could be small dollar amounts, large dollar amounts.
Yeah, I think it just depends on how long you're talking about, what period. Because I think almost everybody experiences fraud over time. Yeah. Like if you're saying in a year, maybe 3 of them are experiencing fraud. But like if you say
over the life of multiple years, near 10.
Everybody's experiencing it. It's a shame too, because it's just growing.
Yeah, it's a form of insurance. Like, you don't go through life without life insurance, health insurance, or some degree of that. Why would you not have insurance?
Well, we talked about this in our last podcast as well with Mark, because he's an insurance agent. But I recommend clients have fraud prevention insurance. I think that's something kind of on the side. But the fraud prevention tools the banks have, definitely, that's not a place you want to skimp. I mean, there's just so many different ways that people are getting fraud. But I would say, in addition to all the stuff the bank gives you, pick up the phone and call people. If you're about to send a payment and you see that the payment information has changed, or if you don't know the company well, you need to be talking to them on the phone. Mm-hmm. And the bank has other tools for dealing with people that you don't know. For example, if you're doing business internationally, you can use letters of credit and things like that, bankers' acceptances, different things like that to help secure and make sure you get your product or whatnot. But make sure that you're actually talking to the people you know. There's nothing's a substitute for in-person or on the phone discussion,
Yeah, due diligence. No, that's a great point, Besim. I think I advise as well. Yeah. I mean, it's definitely good to have those measures in place, and just to make sure you're protected on the back end. Let's close out with the fourth major pillar, the fourth major tenet of Treasury. We covered AR, we covered AP, we covered fraud and its importance. Let's talk about reporting and some of the numbers that are derivative of Treasury services, and what clients can gain from that knowledge, and why it's beneficial to a company.
Yeah, definitely. So, I mean, information reporting is a huge part. I mean, it's basically helps you how you run your business, and all your financial statements, things like that. They all are pulling from the actual transactions that are occurring. If you don't have an efficient way of managing those transactions and the information that's coming across with them, your financial reports are eventually going to suffer from that as well.
Like garbage in, garbage out.
And so there's a lot of ways that banks can help you both manage the volume, but then also eliminate mistakes, because it's going to be a digital process. And so you can download most banks have Treasury platforms that can provide you all kinds of information. They can provide you different levels of information. based on the types of activity you have. So, for example, here's a perfect example. I've had multiple clients who they've gotten large multinationals that they're doing business with, and they get wires from them. And then they have to somebody's got to call their multinational client and spend an hour on the phone trying to figure out what that payment's for and all this kind of stuff. Well, many times those multinationals are putting all the information along with the payment in the remittance data. But a lot of times these clients only have a portion of the remittance data that they're able to see because they haven't talked to their treasury officer to see everything. So, for example, like let's say you're doing business with ExxonMobil. Well, and let's say you have 13 invoices out to them. They might send you a wire for $342,000 that's paying 9 of those invoices. Well, how do you know which ones to apply it to? Mm-hmm. You have to call and figure out and all that kind of stuff. But many times they're sending in the actual remittance data. It says, apply it to these invoices. And all that stuff's there. And if you were able to just capture that data off the beginning, you might be able to reconcile that in 5 minutes, as opposed to getting on the phone, trying to track somebody down in the accounting department, trying to have them pull up your file, figure out what's going on, all this stuff, and then next thing you know, you wasted someone on your team the whole hour just to do this reconciliation where the bank can be feeding you this data because Exxon's already sending it to you, for example. That's just an example of the information reporting. There's other stuff where you can reconcile your accounts very quickly by just downloading a file. We can actually integrate with ERP systems, accounting systems, all that type of thing to where, if you have a sophisticated platform, this is really for companies that are, I'd say 50, 75, $100 million in revenue above. When they start getting a little bit larger, they're starting to get into these ERP systems. Well, you might not even log into the bank system anymore. The bank might just have a direct feed with you that's feeding into your ERP system. You can actually manage everything through your ERP system, and so that's very powerful. This helps eliminate some of the duplication of duties and things like that, and eliminate resources. I had a client that had 20 people offshore doing reconciliations for them because they had like 400 locations. Yeah. We were able to help. With our information reporting platform, we're able to help bring that down to only 3 people. 400 to 3. Yeah.
Due to all this severe automation and efficiency.
Wow. Because otherwise they were just logging into their, basic consumer online banking platform, doing everything manually. And they had, like 200 accounts. Mm-hmm. And so you have to have all these people every day doing this with all these transactions. It's just ridiculous where you can just download that. And now they got 3 people. They downloaded it, put it in their system. They're dealing with the exceptions only. Basically the whole idea is to get things in such an automated way that you're only dealing with the one-off type of thing. Right. And so, it's very transformative. And there's all kinds of services that banks can do. They can feed you all kinds of data. They can take huge things off of your plate. They can issue checks on your behalf. They can do so much. It has a cost,
of course.
But
what's the cost of 400 employees versus 3?
Yeah, no, it's 20 employees. But
20 employees. Okay,
versus 3. Yeah, that's exactly. In this case, it wasn't as dramatic as other cases I've seen because they were offshore and they were already getting paid less. Mm-hmm. But if those employees have been domestic employees, you're paying them their salary, their insurance, everything, all their benefits, dealing with people being sick, all that kind of stuff. And now you would be able to reduce that down to 3 people now. Right. It's very transformative. And, I think a lot of people, they just don't know that banks have all these services because they're not marketed towards the smaller businesses. They're not marketed towards the general public. They're really marketed specific solutions towards a little bit larger companies. Yeah. Once you're 10 million in revenue, kind of going above from there, there's a lot of things that the banks can really do. I've even seen really large organizations have, banks basically work with them on customized solutions where they even build software around it. So, a lot of these banks are becoming technology firms. Yeah. They've got huge budgets. Multinational banks have technology budgets in the billions of dollars. Mm-hmm. And so it's amazing what they can do, and just know that if you're trying to do something, like to automate things or make it more efficient, talk to your banker, because it's probably a way to do it.
Yeah, no, I agree. Any business owner or entrepreneur or otherwise, watching this video, I'd say it's worth a conversation, if nothing else, for your own edification, just to kind of see what other benefits and services. I think Treasury is a often overlooked aspect of the bank that provides a tremendous amount of value. So if you haven't already, have a discussion with your banker. Really dig into some of the benefits of the Treasury service, be it from fraud prevention to efficiencies, collecting money sooner, cash control, and the general information reporting and benefits of that. Besim, I wanted to say, just thanks again for letting me pick your brain. I think this was incredibly helpful. Besim is a wealth of Treasury knowledge. If you have anything else that you want to hear from him, please, reach out to us, and I'd love to, interview him again with some more detail. But thanks for the time today, Besim.
Yeah, no problem. And we did a couple of videos on some of these topics. We're gonna link them, and in the future we're gonna be having some real life Treasury officers that are up to date with everything, because technology is always moving. And yes, I did this in the past, but there's a lot of technology that's changed since then. So we want to get some of the updates.
Awesome. No, I appreciate it. Thanks everyone for watching the video. If you find value in these videos, this video in particular, please hit that like button, subscribe to the channel, pass it along to anyone else that you think might find some value in it. It's Capital Interactive with Besim and the Boz. Appreciate your time today, and we'll see you on the other side. Peace.